Good afternoon, ladies and gentlemen, and welcome to this first one of the trade review sessions that we're doing here at Bull and Bear. On the background, just to have some background, we've got the screens or the prices that are trading at this particular time. But there's a few things before I get around to answering a few of your questions. There's just a few things that I want to go over from during the week and in terms of the results that we've had so far. So if we just look at the results so far for this week, there's the 5 days. For those of you who don't necessarily see all of the detail or look at it in one format during the course of the week, there's the breakdown per day. So you can see that it was profitable every day this week, including today, although it's much smaller numbers because I have something to take care of this afternoon. The things that to point out, I suppose, just looking at these screens, is there are a couple of trades left open. Gold is probably the market that I'm happier to hold of all of the different markets that we trade. So I'm short a couple of gold positions at the moment, one from Wednesday and one of them from Friday or today. Aside from that, everything is flat. There's nothing else being carried at this particular time. The big losses, if you like, on the individual trades came on Tuesday. And I want to talk about a little bit more about the Dow trades that I've been doing during the course of this week and last week, specifically around the opening bell in New York. So we'll get on to that in a few minutes, but just of note are the two losses, ugly losses as I've called them a couple of times during the course of this week. 313 points on one stop and 280 points on another stop. There's a couple of reasons for that. I built up too much of a position prior to the opening bell in New York, and then as there was a bit of a squeeze higher, it was proving very difficult to hold all of the positions. So in order to keep some of the positions open, I stopped two of them out. Had I held on to those positions and we'd seen the market fall back as it did, and fall back quite aggressively, then there wouldn't have been that 600 points worth of loss on Tuesday. Plus there would have been a reasonable profit put against those as well. So at the end of the week, as we currently stand, we have 2,961 points worth of profit, points or pips, whichever way you want to call them. They're effectively the same thing when you come to CFDs and spread betting. But it could have been a lot better, and equally so, it could have been a lot worse had I not posted so many winning trades. But the thing to point out there is the two stops that occurred on Tuesday. If we look at, if we just go back up there, if we look at some of the summary from this particular week, there's been 91 winning trades, only 3 losing trades, of which 2 of those were those the stops that we saw, and there've been a couple of break-even orders during the course of the week as well. So it's been, in terms of the number of trades that I've transacted during the course of this week, it's been one of the busier weeks, but thankfully returned to some really, I'm not going to say very large, but it's a decent profit level during the course of this week. We've had a couple of weeks that have been sticky over the last couple of weeks. And as I've mentioned to a few people during the course of this week, some of trading is not necessarily about making money, but it's managing yourself through those difficult periods. So when you are looking at a loss, how you manage yourself through that position and hopefully or ultimately out of that position. So thankfully over the last few weeks, we haven't really taken we've taken some big hits on a daily basis, but over the course of the week we've been able to manage our way through that, manage our way through those positions, and haven't really taken a week where it has been too damaging. So as much as everybody wants to be making money, and obviously that is the focus, and looking at those profitable weeks and and how you can make money on a daily basis, it is equally important to push yourself or manage yourself through those difficult periods as well, and make sure that your risk is kept under control, and that any losses that you might suffer over a weekly basis are not overly damaging. So it's not always about making money all of the time. In terms of the trade that I want to, or the trade that I want to look at a little bit more closely before we get on to some of the questions that you've been asking, this is just a graphical representation of the Dow yesterday afternoon between 1:30, I believe, and 2:30, or just after 2:30. So it's probably between 1 o'clock and 3 o'clock in the afternoon. So we've split it up into three separate sections. You've got section 1, section 2 and section 3. The time at the end of section 1 is the opening bell in New York. Then you have the first part of trading, which takes about 7 or 8 minutes in section 2. So this is a 1 minute chart. And then section 3, if you want to call the aftermath of the opening bell. So what happens in section 2 is obviously all of the stocks are opening, and the Dow Jones during that period fluctuates quite dramatically, and typically you see something in the region of 100 to 150 points of a range during that period. So in section 1, as we're approaching the opening bell, what's happened over the last couple of weeks is there has been a bit of a movement to the upside. You can see that again here. This was yesterday. And then as you hit that yellow line, which is just prior to the opening bell, we start to see a bit of a sell-off. And that sell-off continues from, looking at yesterday's levels, we're looking at something around 25,820, going down to somewhere just above 25,700. So you can see a 120 point drop off in section 2. Now this pattern is occurring every single day for the last 2 weeks, and you can go back and you can check on your own screens, check on your own charts, check on your own data, and you'll see this pattern every single day. See, the key for me has been trying to sell at the right level in section 1 in anticipation of that drop off in section 2. And what you'll see I've done over the last number of days is, after I've sold in section 1, I'll place a limit probably 50 to 70 points below that level and expect that to trigger in section 2. And a very quick return, usually 50, maybe sometimes as much as 100 points or pips during that period. And then we see a rally to the upside. Now the rally to the upside yesterday was quite significant. We rallied all the way up to 26,000. So all of this has occurred within an hour or an hour and a half, because this is a minute chart that you're looking at on your screens at the moment. But it's a pattern that has emerged over the last 2 weeks. It doesn't mean it's going to be there every single day, but it's there at the moment, and I seek to take advantage of that every day as we approach the opening bell. And it's just as the positions start to settle down during that first 10 minutes of trading. But the pattern has been the same. None of you do your education with bull and bear cap, but all of you will have done education in various shapes or various guises over the years, and you will have been told many times that stock markets do repeat behaviours, they do repeat patterns, and this is definitely one that's there at the moment and something that we should be taking advantage of. The key though is, at what level do you sell during the first phase? And on Tuesday, when the 2 stop outs occurred, or those 2 ugly stops as I'm referring to them occurred, I got into the trade a little bit too early. So I tried, and yesterday I waited until closer to the opening bell before I started to short the market. There was a 30 point drop off, I seem to remember, almost immediately, or prior to the opening bell, probably occurred here on this candlestick. So I closed one of the positions and then allowed the remaining 2 to run into the open. The limit or the take profit level was taken out fairly soon after the opening bell, and then again, as we saw this rally to the upside. So there's a couple of distinct trades that you can take advantage of here. A short position as you're in section 1, approaching the opening bell in New York, taking profit during section 2, and then in section 3 looking for that rally to the upside. And the rally has occurred every single day as well, and like I said, please go back, look at your charts, and look to see how many times this has occurred over the last 10 to 14 days, and I think you'll see that it is quite significant. We've got one question in there that I'll just answer whilst we're on this particular point. The question was asked by somebody who's asking what were the I traded just before about an hour before we started this particular session. I sold the Dow at 26,175 and then I bought it back about 28 pips lower. The question was asked, why did I decide to get short the Dow at that particular time? Again, it comes back into the rationality of what I'm looking for ahead of the opening bell. As you'll see, and you'll have witnessed many times during your trading day, there's a lot of activity and move in the morning session, and so I do a lot of trades early in the morning, and then it's about positioning myself for the opening bell in New York. So in the early trades, and again over the last couple of weeks, you can see that there's a lot of movement before the bell at 8 a.m. And then in the early part of the morning session, what I've witnessed over the last few weeks again is that there's a mid-morning rally. It usually starts in the DAX and then is very quickly followed by Dow futures as well. And then we start to settle down ahead of the US Open. And you can see that a little bit in the in section 1 that we're showing there. At the back of my mind, throughout all of that, is that I want to be short the market ahead of the US Open. So the calculation or the thought process is ongoing about when am I going to start to get short the market. So what we saw this morning, we saw futures trading below 26,000 first thing this morning. I think they were probably trading down as low as 25,800 when I first woke up. And we've rallied all the way up to fairly close to 21,200. So a 400 point movement on pretty much no news. As I wrote in my market comment this morning, I have a positive bias or a slightly positive bias to the market at this time, but nothing that's overly strong that's going to make me chase this market too aggressively. So we've seen a 400 point movement in a reasonably short period of time. We're pre-US Open. The American traders are probably only waking as we speak, and it's a big rally on fairly limited news. I'm also thinking that I want to be short ahead of the opening bell in New York. So if I have any particular bias at this time, it's to sell into a rally. So we've had the rally, it's pre-US Open, so I'm expecting again a bit of a drop off around 230 of 50, 60, possibly even 100 points. So if I'm going to trade this market during this particular period from midday onwards, it's going to be from the short side in anticipation of that move that's going to occur at 230. So that's the logic or the rationale behind the trades that I put on during that particular period. But it is a quiet period for trading. You don't expect the market to run away from you too much during that period. And like I said, at 230, I'm expecting the market to fall further to the downside, take advantage of that, and then hopefully position for a rally to the upside. And I think it's pretty much occurred every single day for the last 2 weeks. Now I've said that, it's probably the commentator's curse and it won't happen today, but please have a look around 230 A minute chart is probably the best thing to look at it with, or if you're watching the ticker, you'll see that it gets quite gappy, but the predominant, I think what tends to happen pre opening bell in New York is that the people trading the futures and trading the other markets are a little bit over enthusiastic, and we overshoot the opening level, and as the stocks start to open, there's a few more sellers come in, and there's a bit of rationalization in that first 10 minutes of trading. So hopefully that's a good enough explanation there. Paul is asking, how do I trade with Ava? Myself, it was how as opposed to why. And I'll answer both if you like. Ava are one of the few brokers, or probably the only broker, that offers genuine futures contracts. So the liquidity is very good. You're not chasing markets. There's no slippage. And from a trading perspective, I think it offers everything that you that you possibly would need. As you can see on the screen, the majority of the as you can see, what I'm using here is MT4. Obviously Ava have their own app as well. I think it's important that you use one as a backup if for some reason it's not available, but MT4 is the way that I trade. The thing within that is that what you want to make sure is that you're for those of you who are new to trading the markets, that you put your stops and your TP levels within it. From, as you can see on the screen, I use the one-click trading so that I can get the trades on as quickly and as efficiently as I can. So it's a case of just hitting the bid or lifting the offer on these screens, and then adding the stop losses or TP levels as I deem fit from that particular point onwards. So that's really why that happens. A couple of other things just to finish off on, because I don't want to run this session for too long, and 20 minutes is kind of the level that we were looking at. Fridays aren't a particularly aggressive day for me for trading. There's a real question whether you should put risk on or risk off. There isn't a great deal of difference from my perspective. I'm trying to finish the week as flat as I possibly can. Markets are obviously going to be open again on Monday, so you've got the best part of 2.5 days before you're able to reduce or offset any of your exposure. So Friday for me is the day that you want to be flatter as quick as you possibly can, and the chances are, if that you start to run up a larger position in terms of the number of trades that you're running at any one time, the chances are that you're unfortunately going to be running a position over the weekend. Joseph is asking, are there any indicators that I use other than moving averages? I use a combination of lots of things. The relative strength index is one, the RSI. I look at Bollinger Bands as well. I think the 200-day moving average is the strongest thing that you will ever see within, certainly within the indices. And so the importance of that can never be understated. But a lot of what I do from a daily perspective is very much sentiment based, around what my feel is of the markets. You look at what data is going to be delivered that particular day, and then try to develop a bias. And as I've mentioned in my market comment early this morning, the bias was slightly positive. That's proven to be correct. During the course of the day, we've rallied from about 25 850, 900 up to where we are now around 26, 160. So I'm going to leave you there. We've had a few questions. We're going to do these every week, so hopefully people will be enthused to come back on and listen and ask their questions. And if there's anything that we can help you with during the course of the week, then please get on to either I or Sam, and we will gladly help out as much as we can. Thank you very much for joining me today.